Hello and welcome. I'm Hania Salah, Director of the Columbia Global Center in Amman. I'm delighted to have you join us for this important conversation, Navigating Change, How Renewable Energy is Meeting Economic Concerns in the MENA region. At the Columbia Global Centers, our mission is to bring together faculty, students, and partners across disciplines and borders to co-create knowledge, learn, and spark shared action. The Amman Center provides a regional base for scholarly activities throughout the Middle East and strengthens the university's academic partnerships and programs. Today's event reflects that commitment, bringing together regional insights, global expertise, and practical experience. The Arab Gulf countries are reimagining their energy and investment strategies, not only as a response to climate goals, but as a means to drive long-term economic transformation. This transition raises important questions about how the region can balance growth ambitions with energy security and sustainability. It also opens up conversations around the role of innovation, investment, and the implications of these shifts. We are pleased to host a distinguished panel that will help us unpack the drivers behind this transition and what it signals for the region's future. This event is co-sponsored by the Center on Global Energy Policy at Columbia University. Moderating today's discussion is Dr. Karen Young, a senior research scholar at Columbia University's Center on Global Energy Policy. She is the founding director of the Program on Economics and Energy at the Middle East Institute, USA, and is currently a non-resident senior fellow there. Dr. Young teaches at the U.S. Department of State Foreign Service Institute and Columbia School of International and Public Affairs. Previously, she was a resident scholar at the American Enterprise Institute, a professorial lecturer at George Washington University, a senior resident scholar at the Arab Gulf States Institute, and a research fellow at the London School of Economics, Middle East Center. She has also held research and administrative roles at the New York University and was assistant professor of political science at the American University of Sharjah. Karen is a member of the Council on Foreign Relations and is the author of two books, The Economic Statecraft of the Gulf Arab States and the Political Economy of Energy, Finance, and Security in the United Arab Emirates. She has published widely in outlets such as Foreign Affairs, Bloomberg, the Financial Times, and Lawfare. Joining her today are three esteemed experts. Tim Callan is a visiting fellow at the Arab Gulf States Institute in Washington and a former assistant director at the International Monetary Fund, where he served as mission chief for Saudi Arabia and led the division covering GCC countries from 2012 to 2021. He also headed the IMF's research program on the region and later served as special advisor to the executive director for Saudi Arabia. His work focuses on oil exporting economies with expertise in diversification strategies, fiscal frameworks, and exchange rate policy. Jamie Ingram is senior editor at NEAS, Middle East Economic Survey, where he leads coverage on energy and political developments in the Gulf region and global energy markets. Before joining NEAS in 2015, Jamie worked as a MENA analyst at IHS and as a Gulf researcher at the Royal United Services Institute. He brings extensive experience working across the region and has conducted in-depth interviews with many of the most senior energy officials in the Middle East. Jessica Abeid is an energy engineer and policy consultant with over 15 years of experience across Europe, the Middle East, and Africa. Jessica is a founding partner at New Energy Consult. She has held advisory and consultancy roles at a wide range of entities, including the United Nations Economic and Social Commission for Western Asia, Arab Petroleum Investment Corporation, World Bank, and the International Institute for Sustainable Development, among others. Together, the panel will explore the key economic, technological, and other forces shaping the energy transitions and what these changes signal for the broader global energy landscape. Following the discussion, we will have a Q&A session, and I encourage you to share your questions with us. Thank you once again for joining us, and I'll now hand it over to Karen to lead today's conversation.
Thank you so much. Well, this is going to be a lot of fun. We have such a fantastic group of people to kind of lead our thinking and our discussion today, and really welcome questions from our audience, which you can put into the Q&A, and we're going to head to those probably 30, 40 minutes from now. I wanted to start the conversation just, kind of recognizing this tumultuous moment we are in sort of global markets, but also what this means for clean energy and what it means for the Gulf states as they think about their energy transition, and how that might be a model or not, for the wider region and for the rest of the world. Um, the kind of changes that we're seeing, I think, are really, really interesting in the GCC states right now. In terms of innovation, particularly in the clean energy sector, there's a big new deal between TAQA and EWEC in the UAE, which are basically modeling how we might use renewable energy, solar PV, along with battery storage and also gas-fired electricity, to have sort of 24-hour, 7-day-a-week electricity supply, with that kind of backup issue, which has been so difficult for many renewable projects to achieve. And that's like a $10 billion kind of investment. So that's one example that we're seeing in the GCC of the state's ability to deploy capital through state-related and state-owned entities, but also that real political will in terms of a regulatory process, a permitting process, the ability to build out and contract these very large infrastructure projects to meet both a commitment to produce clean energy, but also to meet a commitment in terms of state investment strategy. And that's to have plentiful electricity supply, particularly for the high demand sectors like AI. And supercomputing, which really, really, sucks up the electricity supply in any place, no matter where it is. So that's just kind of an example of how things might be done. But there are peculiarities about the Gulf, including the financing side, the role of the state, which certainly facilitate those kinds of operations. One of the other things that we're seeing in the GCC states, which is probably different than other places in the world in terms of the rollout and deployment of clean energy, is the ability to build particularly solar power in other countries, in developing countries, in Central Asia, in Sub-Saharan Africa, all over the Middle East. And one of the projects that I'm involved with at the Center on Global Energy Policy is tracking that deployment of clean power. And so we have a tracker on the website, which all people you can check out. But we're trying to look at where those projects are, how they're constructed, how they're financed, and what that means for the availability of renewable energy, but also what, is the kind of agreement from the state that is the recipient or the host of that project, what that means for how countries that have relied on concessional financing, particularly, how they go about meeting some of their own clean energy goals. So that's a little bit of an aside. I want to dive into our conversation with our three great experts. And if we can, I'd like to start with Jamie. So Jamie works at a fantastic publication that I highly recommend at MEES. And MEES just really has a lot of great information on the projects that are happening in the region, and sort of this change and build out that's going on. And Jamie, I wanted to ask you to comment on how you see the environment changing in the GCC in terms of renewables build out, maybe some of the projects that you find particularly interesting or novel. And is it replicable? Is this activity that's happening in the Gulf, what's special about it? How can it maybe work in other places? And the big question, of course, is the question of how renewable energy fits into broader diversification projects, and what does that mean in terms of the bottom line for these states? We'll get to a lot of that, and I know Tim will have a lot to say too on kind of the public finance side. But Jamie, really interested for your kind of opening comments and what you see going on in the region. I'm sorry, Jamie, your audio is not quite working. Yeah, that's better. Make it a bit
Excellent.
louder if you can. There you go.
Yeah. Thanks for the kind introduction and for setting up an excellent discussion today, Karen. Yeah, I think that after quite it's fair to say, a slow start to renewables developments in the GCC, we're really starting to see project development pick up pace in the region. I'd say that projects in the likes of Saudi Arabia and the UAE in particular kind of characterized in particular by their large scale, by the low development costs, and as you kind of alluded to in your introduction there, increasingly we're seeing innovation in the models that are being deployed across the region. It's undoubtedly at the moment development is centered in Saudi Arabia and the UAE. Also a lot of projects in Oman and Qatar to a lesser extent. There are challenges elsewhere. Bahrain, it doesn't have the large land mass available, whether they can go for these large scale solar projects, but we're starting to see them look what natural assets they do have available to them, and they're looking at quite large scale offshore wind developments, which would be a first in the region. But the laggard in the region is Kuwait. They're struggling to get their renewables developments off the ground, part of the kind of broader bureaucratic malaise that's affecting projects in Kuwait. We'll see whether we might be able to see a bit of a change of pace there now that the government is taking action after controversially suspending parliament. But that does, undoubtedly create a potential opportunity there. I'd say that, the boom that we've seen recently in Gulf renewables, it's not due to any particular, large-scale environmental concerns, as it were. This is very much a hard-nosed economic calculation that's being made in the region. Solar prices in Saudi Arabia for solar PV, they've dropped as low as almost $10 per megawatt hour. For wind, it's closer to $15 per megawatt hour. That compares to that is less than gas. That means that renewables are not just cost competitive with oil and gas fired power generation. And so as those have been driven down in large part by scale, we've seen those costs come down. There has been a little bit of an increase in recent years since 2021, 2022, where we've seen supply chain disruptions and inflation push up prices a little bit, but they're still very much competitive. And the calculation that these states are making is that every barrel of oil, every cent of gas that they're burning in their power plants, that's a dollar that they're not earning. That's a dollar that could be put into much more valuable, higher value added economic gains. We're talking about potentially exporting the oil or diverting oil and gas into more valuable economics like like the petrochemical sector. So this is very much a value accretive issue. If you use renewables, that displaces the oil and gas, you can make more money that way. If we look at Saudi Arabia in particular, they burn around 1 million barrels a day of oil every year. That peaks at about 1.4 million barrels a day of oil in the summer. They're looking to change towards a 50-50 balance of gas and renewables, displacing oil entirely. That is a huge potential revenue boost for Saudi Arabia if they can actually kick that off, and that's by 2030 that they're looking to do that. The scale is vast. At the moment, the final figures aren't available yet, but we calculate that Saudi Arabia probably had around 6 to 7% of power generation coming from renewables last year. To get up to 50% is by 2030 is a huge increase. But they are, at the moment, they have 6 gigawatts installed, but they're looking to get up to as much as 130 gigawatts installed by 2030. The pace is definitely increasing. They're at 6 now. We estimate they can get to 12 by the end of the year. Saudi Arabia has now overtaken the UAE as the leader in the region on a scale basis. But as you alluded to, there's this very much a large project that EWEC and TAQA are looking to develop in the UAE. That's one of the most innovative projects that we've seen. The issue that renewables have always had to contend with is intermittency. What do you do when the wind isn't blowing? What do you do when the sun isn't shining? They're looking to couple this with a large-scale battery project so that they can provide 1 gigawatts, 24 hours a day, 7 days a week. That will require the installation of 5.2 gigawatts of solar, so it's a huge undertaking just to provide 1 gigawatt, but it's definitely a project that's going to be looked at not just within the region but internationally as well. Is this a template where you can start to provide clean baseload power generation across the country? It's probably not a template that can be followed across the globe because, as I said, the Middle East has very particular advantages. It has the high levels of solar radiation that simply aren't available in Northern Europe, for instance. It also has large areas of land that can be developed for solar that, again, places like the UK, France, America simply cannot manage. So while we've seen Saudi Arabia overtake the UAE, Oman also has big plans. They want to target 30% of their power generation by 2030 to come from renewables. Qatar, it's looking to kind of decarbonize a lot of its oil and gas operations through displacing gas with renewables. Then they can start to market their oil and gas as being low carbon. They're hoping that that will give them either, if not an economic advantage, at least a competitive advantage when they're selling against the competition. As I mentioned, Bahrain, that's a really interesting one with looking to offshore wind. But it's not just that they're looking at. They're also examining cross-border operations. So they're in discussions with Saudi Arabia to develop, I think it's about 1 gigawatt potentially of solar generation across the border in Saudi Arabia that would then supply their aluminium operations domestically. Kuwait, they've got problems with the public-private partnerships frameworks there. It's very cumbersome, very slow-moving. A lot of projects, they come up for tendering, nothing happens, they get re-tendered a couple of years later, they're stuck in a bit of a morass. So the upshot of this is that we've got a couple of tiers going on within the GCC. We've got the UAE and Saudi Arabia very much pulling away at the top. Some of the middle players starting to get their act together and have a slow, not quite as ambitious rollout. Kuwait, a laggard at the end. I noticed, it was very interesting you mentioned the AI drive in the UAE, because that's a potentially very interesting development. I think that given the economic benefits that come directly from using renewables to displace oil and gas, what's going on in the region isn't going to be affected by a potential slowdown of the energy transition. But the UAE was very much looking to renewables to enable itself to market itself as we can decarbonize hard to abate industries. Let's talk aluminium, let's talk steel. And they were trying to bring in foreign firms into their industrial sector to make themselves a more competitive destination for that. That might take a bit of a hit from the possible slowdown in the energy transition narrative in the wake of the Trump election, but the UAE is very much involved in the AI game. That's another, very energy intensive sector. And so if they can plug in a lot of large scale renewables into that at a cost competitive level, of course, that's something that they can pivot away from heavy industry to help grow their economy into the future. So I think I'll leave it at that, Karen, other than to say that, outside of the domestic sector, the implications of this could be quite profound when we look at Saudi Arabia. If they are able to bring another 1 million barrels a day of oil that's currently consumed domestically onto the global market, that equates to about 1% of global demand at current levels. That could have a significant impact on oil markets going forward, but that's a discussion for another day, perhaps.
Well, I think we'll come to that, and there's already a nice question in the Q&A, which is essentially like, what will demand for oil be? And it's nice that you might have this excess capacity, but we're seeing right now within the OPEC Plus sort of coalition problems in deciding who gets to produce when, and we're seeing certainly signs of a dampening of global economic activity, and that has enormous consequences for producers in the region. Another thing that I think we should maybe earmark for our conversation, and I know Tim and Jessica might want to add to this as well, is that how we think about supply chain costs for the renewable sector and even the oil and gas sector that will be very different across different geographies. So clean tech right now in the United States is really going to struggle, right? But in the Gulf, that could look very, very different, because there are already agreements with many Chinese suppliers of solar panels and different equipment that the sort of financing of building these things looks very different in region to region. Okay, I want to turn next to Jessica, and I know Jessica knows a whole lot about sort of the engineering and the process of building out large projects like this. And so maybe you'll talk about a little bit of cost issues, of financing, why the Gulf has so many advantages, but then what that maybe looks like in other parts of the region, and maybe some trend lines that you're seeing and paying attention to, and the goods and the bad. So welcome, Jessica. Thank you for any kind of insights you want to share with us.
Thank you for having me, Karen, and the team with great colleagues. Yeah, so when I reflect on the project development and project financing and the structure of financing of renewable energy projects, and why the Gulf boosts a lot of key strategic advantages, and that's beyond just having available resources and abundant resources and wind and solar, and also geothermal, we're going to see in the future, etc. But there are two key factors that could drive typically a project off a cliff, which are land acquisition and grid connection. And we've seen that in so many places in Europe. You have fragmented land. Sometimes to develop just one solar project, large-scale utility, you could have to acquire and lease hundreds lands. And then you have to negotiate and get into, sometimes often happens to get into disputes with landlords and owners and structure this land lease, etc., is a headache. But you don't have that in the Gulf because you have vast lands at a relatively cheap cost compared to others. Grid connection is also a very critical factor, and we're seeing that the grid now, grid infrastructure, could be a key hindrance in large-scale development. We're seeing that in the US, in Europe, sometimes the lead time is 5-6 years. Even in Greece, we're seeing even a huge uptake in solar, but you have to wait for a grid connection offer. The grid is weak. We need to develop these substations. All of these are taking a long time, but these develop quite fast compared to other places when we look into Saudi Arabia and the UAE. But there are also other key factors that are quite important in the project structure and in the financing structure, especially. The availability of equity, and we see that there's a huge government support for solar and wind, particularly solar projects in the Gulf, low cost of debt servicing, that's especially for Saudi Arabia and the UAE, of course. We're seeing long PPA tenures where power purchase agreements are signed for 25 years, sometimes even for 35 years, and it gives a lot of favorable terms to the developers. Counterpart credit worthiness, of course, it's not easy to sign an agreement with a utility that's bankrupt or a government that's bankrupt. So counterparty credit worthiness is very important, and low taxes. And then a key thing that's often under-discussed is that the size of these projects. There are mega projects are being developed in the Gulf compared to elsewhere. For comparison, for example, in the UK, the average utility scale solar PV system ranges between 10 to 50 megawatts. In the Gulf, in the MENA region, it's on average 200 to 300 megawatts. In the Gulf, we're now 1.5, 2 gigawatts, which are at par with China. For the US, large-scale utility solar PVs are considered anything that's above 1 megawatt. So we have the bulk of large-scale utility is 1 to 5 megawatts is a large scale. So also these mega-sized projects benefit from economies of scale. And this is specific to the Gulf region. That's not easy to replicate elsewhere, even if we work on reforming the economy and the power sector and having an easier, smoother licensing process. The ability to develop these large-scale mega projects is a specific, unique characteristics of the Gulf. Of course, the entire MENA region also, although the Gulf is leading in this regard, other countries may struggle, especially that the energy transition and the development of renewable energy, of course, does not happen in a vacuum and is impacted by political stability, economic stability as well. It's very difficult to imagine that we can have low-cost solar PV systems developed in countries with depreciating currency, because the risk premium is going to be factored in. You won't have as many interests in terms of developers, investors, lenders, etc. And the entire region, as Jamie has mentioned, for the Gulf, but also the entire MENA region, is seeking to reduce domestic dependence on fossil fuels for different varying reasons. For net exporters, it's of course to have the ability to export and free oil and gas for export, but also for net oil importers, we have like Jordan or Lebanon or others, they have significantly struggled from the bills of importing fossil fuels. Now we're currently in volatile markets, and oil prices are low. But when we look at the Gulf, it's not a matter of policy for short-term gain. We're looking at the long-term influence. And Gulf states in particular are not aiming to just develop renewable energy. They want to be a powerhouse of clean energy technologies, which links to your point on innovation, and not just implementing technology, adapting this technology, but also providing research and development. For example, lithium battery storage is impacted, highly sensitive to temperature. So high temperature would impact the performance of lithium. This is why it's very important to develop this kind of storage innovation and research and development into different storage types and solid states and long-term storage. So I'll stop here.
Well, thank you, Jessica. You're getting into the weeds, and I love it. We're putting a lot of ideas and all of these constraints on the table, and we're getting good questions coming in from our audience as well. So we've talked about some of the financing constraints, the ability to build out in such large scale, which is interesting in the Gulf. And Tim, I want to go to you to talk about, what this means from a government budget perspective. We are in a much more difficult price environment for oil exporters right now, a lot of uncertainty sort of going down the road on cohesion of the OPEC Plus alliance, but also of what overall demand will be for fossil fuels. And how do you balance those questions of investing both in renewables or perhaps in legacy industry now, and thinking about what the long-term kind of revenue and benefits will be. So you know the Saudi case exceptionally well, but if you want to comment on that and others, we'd really love to hear from you. Thanks.
Great. Thank you very much, Karen. Yes, I'm going to focus on Saudi, and given I'm far less of an expert than Jamie, Jessica, or yourself in terms of renewables, really focus on big picture, I'd say macro, but maybe it's a bit beyond macro. And I guess the main point I'm going to make, and it does pick up a little on what Jamie and Jessica already said, is, I mean, it seems to me in a country like Saudi Arabia, oil and renewables are actually complements to each other in many ways, and maybe I'll elaborate a bit on what I mean by that, rather than competing, which I think is more the case in an oil importing country or many other countries where if you expand renewables, you're going to be importing less fossil fuels. So I mean, I guess, at least as I see it, and this begins to address, I think, one of the first question in the chat. There are two basic, trends that the Saudis are expecting to go on, which is underlying the renewable strategy. The first is domestic electricity consumption is continuing to grow and will grow, quite strongly. That's because, you're seeing strong population growth. Economic growth pretty robust. You need desalination as population grows. Global warming itself is probably going to mean more air conditioning needed, data centers, AI, etc., etc. And we've already seen, I think, since 2010, electricity growth in Saudi has averaged about 4% a year. We've seen two sets of electricity price reforms, which may have slowed somewhat the growth of electricity consumption, but sort of haven't changed the trajectory. And back of the envelope, if I assume the economy grows on average 3.5% a year, electricity demand is likely to double by 2050 if there are no further price reforms, and about a third over increase by a third over the next 10 years. So that's one trend, right? Increasing need for electricity. The second trend is, I think, looking beyond the short term in the global oil market, the Saudi expectation is still that oil demand growth in the longer term will outstrip supply growth. And that will create a imbalance between demand and supply in global oil markets. So Saudi expects demand to continue to grow out to 2050, maybe beyond. They don't buy into the peak demand occurring earlier and at a lower level than that. On the supply side, they think a lack of investment by oil majors and in many countries is going to eventually lead to lower output in many of these countries as declines in existing fields kick in. So that presents them an opportunity. And yes, at the moment they're sitting on spare production capacity of 2 to 3 million barrels a day. But the expectation is that the market will be more favorable for them in the long term, and their spare capacity plus maybe more will be needed to balance the markets. So, their renewable energy strategy, as I see it, is driven by the need to meet growing domestic electricity consumption and the desire to free up more oil for export, or indeed for using in other higher value endeavors such as petrochemicals and so on. So more renewable energy in Saudi doesn't equate to less use of oil when we look at both the domestic and the export market. As Jamie said, and I think I probably got these figures from one of his articles, the domestic oil burn is, about 1 million barrels a day. Without changes in the input mix into electricity, there's going to be more of a call on oil, and that would cut into potential oil export volumes and revenues going forward. So effectively developing gas and developing renewables is insurance against this. And there is clearly a lot of investment going on. Achieving 50-50 by 2030 looks incredibly ambitious, but the direction I think is clear. But that doesn't mean that Saudi is going to be less reliant on oil in the future. It just means that more oil will be exported or used for other purposes. And I think the oil minister has consistently said that Saudi will be the last producer standing. So they have no intention, if they can help it, of leaving oil assets stranded in the ground. I also actually think, the talk of renewables, I think often seen as a hedge against, a future drop in oil demand. And I wonder whether that's really true, because, Saudi is so dependent still, despite progress on export revenues and fiscal revenues from oil, that really it's only a hedge if you can yourself generate significant revenues off renewables. And, I'm not sure unless you can export more oil, then it's sort of hard to see that hedge. Then maybe just going to a last point in terms of the ability to finance future investments in the power sector, but more generally. And I would just frame it, the power sector is one part of a massive domestic investment program underway in Saudi. I mean, you've got Vision 2030 giga projects, you've got the regional and global events they'll have to invest heavily in, such as Expo, Soccer World Cup. And then more recently, you've got these commitments that have been made to the US in terms of trade and investment. And maybe the numbers themselves seem very high and unrealistic, but I suspect some move in that direction at least is likely. Some of that may be consistent with all of the other projects, but some of it maybe not. And then the question is, how does the power sector and the investment that's needed fit into that, and what are the priorities being said? And yes, I mean, some of this money is coming from private sources, but certainly in power infrastructure, a lot of that investment, I suspect, needs to come from public sources. So you have a huge investment envelope, needs to be a priority set. And then we come, of course, to what happened over the last week, and maybe even more general in terms of the oil price environment where it currently sits is certainly not conducive to funding the scale of projects that Saudi has in mind. I did a calculation last week, which unfortunately was very quickly, sort of made, I guess, a bit obsolete. But, I look at, if I assume oil averages $70 a barrel this year, you have production increases in line with OPEC plus, then oil export revenues this year will be about $200 billion US. That's down $125 billion or 11% of GDP since 2022. So while, in a sense, things may have looked very achievable in 2022 when, these plans were, sort of in a sense being scaled up and rolled out more quickly. Everything looked very optimistic. I think they look more daunting now, even if we allow for the fact that Saudi clearly has a more favorable fiscal position than many other countries regionally and globally. So I think, to me, the question is now, with the less oil financing coming in, where does the broader investment picture in Saudi, both public and private, stand? And then how does that impact them back into the renewable and more broadly the power sector? I don't have answers for that, but I think it's really the big picture question to be asking at the moment. So I'll stop there. Thank you.
Thank you, Tim. Yeah, I think you're exactly right. And even at a back of the envelope calculation at 70, now many people would say you better scale down. Maybe that's in the low 60s actually by end of year. So yeah, the constraints are changing, and expectations of revenue are certainly going to be changing as well. Before we go to these wonderful questions we've got in the Q&A, I just wanted to give our other panelists an opportunity to maybe rebut or comment on anything you heard from the panel. Jessica, did you want to weigh in?
Yeah, I think I forgot to address one of the questions you had for me. It was like the supply chains and the fact that tariffs is now impacting. We've seen that supply chain disruptions in the pandemic. Everyone who's developing large-scale projects at the scale of the Gulf, Saudi Arabia, and the UAE is concerned, of course, about supply chains disruption, but costs. We've seen the cost of solar PV modules increase by 14 to 20% back in the pandemic. We might witness that again with the tariffs. There's a key opportunity for the Gulf, indeed, to become, because they're focusing on localization, especially Saudi Arabia and the UAE, building all these factories that not only assemble, but also produce solar PV, electric vehicles, wind turbines, and others, some with Chinese partnerships, but that also enables them to become an exporter to the region. And by the neighborhood, I mean the broader MENA region, but also African countries. So there's a great opportunity in there. There's been a significant dependence on Chinese components in the supply chains, where more than 70% of all clean energy components come from China. But there is an opportunity, and I think that the Gulf countries are keen on seizing that chance.
That's right, but it depends on something else you mentioned, which is the availability of financing. And so one advantage perhaps of Gulf deployers of these projects, and that's Masdar and Aqua Power, is that they can make different kinds of financing agreements with the countries and the places where they might build these projects. And we're going to see a lot of pressure. All right, you all can tell me if there's a certain question that piques your interest first, but there's some very good ones. Otherwise, I'll just sort of go in the order that we've received them. One good question more on this ability to do big projects which combine battery storage, solar, and even gas-fired electricity generation to solve the intermittency problem. Is this, and you addressed this a little bit, Jessica, this question of grid stability. But it's not just about one country or one city's grid. It's also about that interconnection and the ability then to sell it, right? And that's what Tim was getting to. It's one thing to say, yes, we have this domestic capacity, but to make money off of it is a whole nother thing entirely. So maybe if I'll go to Jamie first, and Jessica, I'm sure you'll have comments on that too. Like, what does this look like as an industry in the region to supply renewable energy and trade it? How close are we getting to that, or what are the stumbling blocks?
I think we're a long way away from that at the moment still, Karen. I certainly agree with Tim when he said that this is never going to be a major money-making operation for Gulf states, and certainly it's never going to be anything even remotely close to their current business model of exporting large quantities of oil and gas. We've seen grid interconnections are not a new thing globally. They're not even a new thing in the GCC. We have had the interconnection, the GCC IA, operational for a number of years now. It has typically been very lightly used. That has increased over the last couple of years, but that's primarily because Kuwait has struggled to keep up installed capacity with demand. And so they're increasingly tapping into the GCC-IA interconnection out of necessity. But it's still not much, that nobody selling electricity into Kuwait is making much money out of it. They are looking to broaden out now. Saudi Arabia is finalizing now an interconnection with Egypt, which theoretically could then connect onto other planned interconnectors feeding into Southern Europe. But I would say that when we come to the interconnections within the region and outside of the region, it is much more about maintaining grid stability. It means that you're connected to the grids elsewhere, that the demand timings in particular are not overlapping entirely with your own ones. So peak demand in Saudi Arabia does not happen at exactly the same time as in Egypt. If we look further afield, it's certainly not at the same time as it is in Greece on a daily basis, let alone on an annual basis. And so I think that's, when it comes to interconnections, that's the key selling point, rather than actually making any money out of it. It's putting in place the essentials to make sure that the increasing penetration of renewables doesn't lead to the grids going into meltdown. And just on the point of that you've raised earlier about can these things be replicated elsewhere? We are seeing NEOM in Saudi Arabia put in place some quite new innovations. They are having a more less prescripted grid system in there, where there will be dynamic pricing models, so that the price of the per kilowatt hour will change. It will increase at peak times and decrease at non-peak times to try and encourage usage across the day as a whole, and so that demand peaks when supply peaks. For instance, when the wind is blowing harder, that kind of thing. So that's something that could be replicated elsewhere in the model, and it's in the region, and it's definitely something to keep an eye on. Bit of a test bed there.
That's super interesting, Jamie. Thank you. Jessica, did you want to weigh in on any of that?
I just wanted to add, not going to speak on electricity intercon, but on storage, and the fact that I'm going to get a bit technical. Storage systems do provide frequency regulation and a lot of ancillary services that are needed by the grid. In fact, in the markets that we're seeing that we have developed energy storage systems industry, like the UK, for example, the way that developers are getting the revenues, because just implementing storage alone is not currently cost effective. It's not a bankable project. So in the Gulf, we're doing, in so many countries, we're doing co-location of solar plus batteries. But in more developed energy storage markets, we're seeing stacked revenues where a developer would sell the capacity to store that electricity and become dispatchable electricity whenever we need it. But they're also stacking grid services such as the grid needs stability, frequency regulation, energy arbitrage. There are dozens of services, but that requires the grid to know at first to have a value, monetary value on these services, and just be willing to pay for it. So we're far from developing these models in the region, but energy storage systems do provide frequency regulation as well.
Thanks for that, Jessica. I'm going to go to another one of the questions, and Tim, you might have an angle on this, not from the technical side, but from the kind of spending side. So if the Saudi plan, which Jamie mentioned, was to be able to displace about 1 million barrels a day, which is currently being used for electricity burn at home, what exactly would be the kind of grade of that fuel? It's crude. Can you turn it into other things at home, which would mean more refining capacity at home, or making it into diesel, or making it into something that other people want, into petrochem? What is your kind of guess on where that goes? And Tim, on the finance side, what is the actual kind of savings?
So on the first question, Karen, I mean, I don't know whether Jamie has more detail on this, but I would think that there are two sources, right? And which I think we both mentioned. One is sort of the export of crude, and then the other part is if it's not the export of crude, what else can you do with the the remaining parts of that 1 million barrels a day? I'm not an expert on this area, so I defer that to others. The financing side, I mean, I guess at the moment, to be honest, the value of an extra 1 million barrels a day, I think as the question alluded to is, well, maybe not zero, but if you put that on the market, clearly prices are going to be heading south very quickly. So I think this is why it's important to think about this as a medium to longer term strategy, and how Saudi thinks about the development of the likely development of the oil market over a much longer period, which I think they have tended to certainly look beyond the short term in how they think about these issues in terms of investments and so on. And 1 million barrels a day, or maybe if it's that is a smaller number in the in what you can actually export of this, it's potentially going to turn into a significant amount of extra revenue that the government can earn on this, if indeed there is a supply shortage going forward. And going forward here is probably talking at least 5+ years, I would think, but it's that sort of horizon.
Or used as diesel in some of these enormous construction projects, right? It might be used at home in other ways.
It could be used at home in other ways as well. Yes. Yeah, absolutely. And I think that's it's important, right, to recognize that Saudi is a growing economy. They have expectations of pretty significant population growth going forward. So the demand domestically for all types of energy usage is going to be going up, and at reasonably rapid rates, I would say, in the next 10+ years.
Hi, Karen. Yeah, if I can just follow up on some of that. So yeah, it's a mixture of crude oil and fuel oil that is burned in the power plants and desalination plants. Last year, it was about 60% of that was fuel oil, with around 40% being crude oil. That balance has increasingly shifted to fuel oil in recent years. And yeah, so there's a couple of things worth commenting on that. One is that a substantial proportion of that fuel oil that's burned is also imported for Saudi Arabia now. So that, if you displace that, you reduce your import bill. So that has an important impact on that side of the fiscal ledger. Another issue is that if you are no longer burning all of that fuel oil that you are producing domestically, you can start to upgrade a lot of the refineries further to put in, install more advanced secondary units so that you can then turn that fuel oil into more valuable products like gasoline, diesel, these kind of things that you can, depending on the exact configuration that you have, you can maybe feed more naphtha into petrochemicals facilities, or you've got more diesel for construction, as you said, gasoline for the domestic vehicles, and obviously exporting all of these products onto global markets as well. So a couple of different issues there.
That's fantastic. Yeah, very clear. Thank you, Jamie. A couple of questions in the chat, which I think are really good ones. One is we haven't mentioned green hydrogen. So talking about renewable fuels, the one which had so much hype and promise, now we don't really talk about it as much. It's not really clear what the market for particularly green hydrogen, maybe blue hydrogen, is getting a little bit more popular. What is anyone's take or outlook?
I can step in a little bit there. Yeah, green hydrogen, definitely the shines come off that. I don't have the pricing numbers off the top of my head, but it is astronomically expensive in comparison to traditional fuel sources, if that's the direction you want to go, or fertilizers, if that's the direction that you want to go with it. So that has definitely slowed down the industry, because the people who are considering producing it, they need to finance that product, and understandably, they either don't want to directly finance it themselves, or they're struggling to raise the financing from private sources without having any buyers come to the table and say, we are prepared to buy this product off you. So that's slowing it down. Again, NEOM, to flag that up, that is an area that has a large-scale green hydrogen project under development. Interesting one there, because that's being developed by Aquapower, by a US firm called Air Products, and by Saudi Arabia's PIF. There's a little bit of a coup at Air Products recently, where the long-term CEO was forced out by the board. One of the issues that the board had complaints about was Air Products increasing exposure to risky gambles in the low carbon hydrogen ammonia space. So that's a bit of a warning that might slow down development of the sector going forward as well.
Yeah, and that kind of leads to another question that which we've received, which is these kind of ability for the private sector to engage. And that very, very large project is one good example, and Air Products being a company that kind of went in early and as a partner with Aqua. In other sectors, whether it's solar or wind or even the hydrogen sector, because these projects are often, with a state favorite and a state contracting sort of agreement, I think we have heard from, particularly in the solar field, that it's difficult. It's a difficult space to compete in the Gulf. Jessica, I don't know if you are seeing any changes in that in terms of opportunities for smaller players or for other private sector opportunities that are happening, or what's the market from your point of view?
So there is private sector engagement. It just that the competition is limited to a number of giants champions that the Gulf has built. And that's part also of the broader strategy that Saudi Arabia has built. It's a Gulf champion it's a champion in renewable energy, aqua power, and the UAE has Masdar, and Qatar is also building its champion. So all renewable energy in the entire broader MENA region are being developed through an independent power producer, which we have private developers. Some markets have higher competitions than others. It's very difficult to get into large-scale development in the Gulf, but we're seeing a more distributed solar PV is picking up across the Gulf countries, and we're seeing more and more players on this spectrum. And some of the models, for example, of aqua power, is just to hire in the different countries they're working on, to also hire local EPCs, engineering, contracting firms. So there is more collaboration with the private sector, but the giants in the Gulf are going to remain as the giants.
Yeah, I think that's exactly right. There's one other question in the discussion in the chat, which I think is interesting. Someone asked about Israel. Israel is a key player in the region, certainly in gas, but also in technology, on solar, and on other kind of initiatives, including the AI and tech scene. So where do you see this in terms of partnerships or opportunities? And we don't have to talk about gas necessarily, but more in clean tech. Are we seeing good kind of startups in the UAE that are relying on Israeli technology, Israeli investors? Has a lot changed since 2023? Anybody have a view on that? No. I think it's hard. It's probably hard to tell. We could probably get some data on kind of the FDI side, but there's certainly, UAE would be the only place where we've seen major sorts of collaboration. Also in the desalination technologies, that's been a long-running expertise in Israel. But in terms of corporate partnerships right now, I don't know, maybe it's not really advancing too much that I'm aware of, but I could be totally out of the loop. Other question, maybe you've got a few minutes left. How low levelized cost of energy for solar in the region puts Saudi Arabia in advantage with respect to green hydrogen or other productive outputs? I mean, this is crazy. The cost of energy in the Gulf is so low compared to other regions in the world, but it hasn't traditionally been used as an asset for industrialization, for manufacturing. We're going to see what happens with AI, but how could this be cost saving? How could this be an advantage? Do you see it expanding into other sectors? Anybody welcome to comment on that?
I will address the cost advantage for green hydrogen. So it's not just renewable energy is an important factor, of course, in green hydrogen, and being able to deploy renewable energy at a mass scale that's needed for hydrogen is something. But also we have the cost of electrolyzer. And the electrolyzer, for example, is now for 1 kilowatt, the cost is at least $1,000. That it could be higher than that in so many places. And we need this cost to drop by at least 3 times for it to be viable. So there are so many different factors. We don't know the actual market size of green hydrogen, if there's going to be market, what's going to be like, how much demand there is going to be. And green hydrogen has been kind of used as a magic pill for so long. It's like it's going to solve all our decarbonization problems, but we're actually witnessing that we actually need all kinds of technologies, clean technologies, and collective efforts just to decarbonize our sectors.
Anyone else want to weigh in there?
Not on this, Karen, but so I had one, question. I think, Jessica raised it. I think it's a really interesting question. I mean, we've spoken a lot about the, sort of, I guess, the generation of renewable energy, but Jessica raised the issue of, how this fits into the diversification strategy in terms of industrial diversification and the desire for higher end manufacturing and so on. And I guess I'd be interested in, I mean, everybody's comments, Jamie, Jessica, and yours, in terms of the prospects for developing solar panel, and whatever else is associated with this. Because again, I guess the question is always, how do you compete with China and others in this field with the relatively high wage levels in Saudi? Is it viable without substantial government subsidies in one form or another? So I don't know if anybody can enlighten me in this area. Thank you.
Well, I think you nailed it, right? It's about labor input costs for sure, and it's about who kind of your main customer will be. And I've been really surprised. I always thought that the Chinese manufacturing of solar panels in the kingdom was meant for kind of the key firm to Aqua to deploy it wherever they were planning to build. But it might have also been used as a hedging strategy to be able to have an export market, anticipating the tariffs that we're seeing now into US markets. So I think there's probably a lot of logics that firms are making when they think about building manufacturing capacity and renewables in the Gulf. Particularly Chinese firms that were prescient, but also are now having to reconfigure or think about what their next step will be. And I don't think we really know yet what the Gulf's sort of site of connectivity in terms of an export location to Sub-Saharan Africa, to the rest of the Middle East, to Central Asia, to East Asia. I don't know. I have a hard time seeing that, but I would love to hear from Jamie and Jessica. Maybe they have views on that as well. Jamie, you want to go first?
Sure. Yeah. I mean, when it comes to the industrial diversification, I've always seen Saudi Arabia as being the GCC state that has the biggest advantage, simply from, it has the largest population within the GCC. You want to be building, one of the reasons that the GCC countries generally haven't gone up the value level is that companies want to have their end production facilities close to the major demand markets, and that simply hasn't been within the GCC. Whereas Saudi Arabia, I would say, is the only GCC country that has a large enough population where, let's say, an EV company can set up a manufacturing base within the country and have sufficient market base to make it a profitable venture. So that's certainly one of the comments that I would want to be raising. When it comes to the potential exports outside of the region, it's definitely, within the oil sphere that I look at the most, definitely governments there do see emerging markets in Africa as being a core developmental play for them. They see huge growth there, and they think that they can export from hubs in Oman, in the UAE, into these markets. Whether that's as viable for larger industrial assets, I'm not quite so sure.
Yeah, Jessica, any closing thoughts there?
I wanted to mention that solar PV might be tricky. There's a reason that China has 75 to 85% of the global market. And it's not just in terms of some of the supply chain of actually developing the solar PV panels have very limited competition, especially turning silicon into wafers, for example. There are very limited competition, very few places where we develop that, even in China. So, but could be competition in terms of wind, and the wind turbines for example, imported from China to the Gulf, exported from China to the Gulf, are a lower share, 48% batteries. Batteries also, the Gulf, especially Saudi Arabia, imports a lot from the US. So there are different components. Maybe solar PV outside assembly is going to be tricky, but there are so many different components that where the Gulf could be competitive in terms of building this industrial capacity, but it just depends where the focus is going to be into that.
Well, thank you. I think we got a really rich discussion. We had 3 great experts with us, so I hope you all enjoyed it. Thank you to our audience for the wonderful questions, very thoughtful. And thank you to Colombia's Global Center in Amman for organizing us and putting this together. Really appreciate their assistance, and the Center on Global Energy Policy. And Hanya's back. Do you want to have some closing words?
No, I just wanted to thank all of you. I learned a lot, so it's been a really very enriching conversation. So thank you all.
Thank you. Have a wonderful afternoon. Bye-bye, everyone.
Thanks for having
Thanks,
us.
everyone. Have a great day.
Bye.